welcome to this video module on advanced modeling topics. We're going to focus on our completed LBO model in Excel and look at a few topics and features that we can add to that model. So let's flip over to Excel. Your file for this module includes some orange highlights that we're going to focus on. First area I want to talk about is an operating assumptions toggle. Very common in models where you want to be able to look at maybe a few different cases of operating results. We've previously only been using the numbers that I've got here highlighted as the base case. And I'm just using three simple income statement assumptions: a sales growth rate year over year, a cost of goods each year, and an SG&A as a percent of sales each year. But what I want to do for the purpose of this module is add an upside case and a downside case. So the first thing we should do is just think about what the assumptions might be under an upside. So we know historically our company was growing at 25%. I put in 20% for the base case. For the upside, let's just go back to 25%. And for a downside, let's say it grows at 15%. We also know historically our cost of goods have been 50% of sales. Well, on the upside, those would be below 50%. And on the downside, it would be above. So I'm just putting in 45 and 55. And similar for SG&A. Historically, we've been running at 25%. Let's say on the upside, that can get cut to 20. And on the downside, it goes up to 30. Okay, so we've now laid out some really basic assumptions for three different operating cases. And you can get a lot more detailed. You could have more than three. You could have a whole lot more columns here where you're actually changing things like your inventory turns and your CapEx, basically some of the other assumptions that we have up here, days payable. But for the purpose of this module, let's just focus on these three income statement items. Next thing I want to do is show you how to add a control. So you can see I've got the developer tab open. I think this is something you may need to even activate in Excel, in newer versions of Excel. Older versions of Excel that's still in there, they're called forms or form controls. But I want to add what's called a combo box. So click on that button, and then I'm just going to draw myself a little box, and you can see you get something, and we've seen it a little bit in the model with depreciation, and I used to have it in here, but we're going to right click on it and format that control, and it says input range, and out to the side, hidden in kind of these dark cells, I have just the names of our three cases: upside, base, and downside, and then it needs a cell link. I'm going to just link it to the next cell down and click OK. And now let's watch. We've now got our three choices, and when I hit base, it pulls in one since base is first on the list. If I hit upside, we get a 2 in that cell, and if I hit downside, we get a 3 in that cell. That's very useful to us. It's very user-friendly to people who are using the model. They can see, all right, look, I've got three choices now. Very easy to flip between. But the fact that we're getting this different number here can be very useful to us. We can use the fact that we get a 1, 2, or a 3. And I'm showing you how we're going to use that. We're going to go over to our income statement. And instead of where we previously had it, our revenue growth tied to simply one assumption. You could see we had the previous year multiplied by 1 plus G19. We're now going to give it the option of choosing between the three different cases depending on what we tell it to do. So I'm just going to get rid of those three, and I'm going to say it equals the previous year times, and we still want a growth rate, 1 plus, but that growth rate is now going to be dictated by a formula using an Excel function called offset. So I'm going to write offset, and then you can see Excel's telling me it needs a reference. So offset, basically, you're telling Excel to move a certain number of rows or columns from a given reference point. So in this example, we're going to say from this cell, which I'm going to lock, I want you to move, and we're going to have it move the number of the case. I'll lock that as well in rows and 0 in columns. So if I copy that across, we'll see we have 750, 900, 1080. If I change our case now to the upside case, look at that. We've got higher numbers. I'm just going to do a quick proof for you here. You can see we're moving 25% instead of, and we should see 20% in the old way. Exactly. So that's how we're using an offset function to use what's called a case toggle. And now we just need to do that for the cost of goods and the SG&A. So very simply, we will clear out those, clear out that, and we should all be able to do this, but it's going to be cost of goods is equal our sales times offset, and again we're going to go for cost of goods from that cell, comma, the reference for our case. Lock that cell as well. And I should be able to copy that over once it does its calculation, which is taking a second here. And let's see, we've got a 50% gross margin. And I'm just going to prove to you that we should get a better gross margin when we go to the upside case, right? We got a 55 gross margin, and our downside case, 45. Great. Let's just leave it on upside. Final item we were going to add here was the SG&A percentage. So if we look, that was previously just a function of revenue. Well, same as we just did with cost of goods. Take our revenue times offset from a certain reference, and our reference is now the SG&A title, comma, offset by our case number. And we could see we're now getting a 35% EBITDA margin because we're on our upside case. If we go back to our base case, 25%. And if we go to our downside, it should be 15%, right? Because we have 55 and 30. So we're losing 85% of our revenue and our costs right there. Okay, so that's how to do a case toggle. Next thing I want to focus on is this progressive tax rate box. This is just one of the items where you can make a model a little more realistic to real world phenomena. So in the real world, taxes aren't always just a flat 35% as we've been using. Sometimes they're progressive. They may have one rate on a certain bucket of income and then go to another rate and another rate and another rate. It can get quite complex. I just want to show you how to make things a little bit more realistic. And this can be done also with depreciation. You could have accelerated depreciation charts. There's always a trade-off in a model between how lifelike you make it, how tied to the real world, and how user-friendly it is. Progressive tax rates, we're going to add in a switch that people can turn on and off, but it's one of those items that may be worthwhile if a company's income is low enough. So what we're going to do is we're going to use an Excel function called the VLOOKUP, and I'll show you that in action in a second. But what I want to do is put in a couple of, just 3 baskets here for taxes. So I'm going to say if our taxes are between 0 and let's say 5 million, and I'm just making up some numbers. If they're between 0 and 5 million, I want a tax rate of 15%. If our taxes are then between 5 and 10, I want that next 5 million of income to be pre-tax income to be taxed at 25%, and anything above 10 I want taxed at, let's just say 34%. Now, what we need to do here is account for these baskets. So we know that any income that takes place between 5 and 10 is going to have all of the tax on the 0 to 5 section at 15, and then a portion of its income taxed at 25%. So to reflect for that, we need a little bit of addition out here. So we're going to say equals J26 less I26. Basically the whole amount of that basket times that tax rate. So basically anything that's above 5 million we know is going to have at least 750,000 of tax plus the tax that it incurs at 25%. Likewise, for the next basket, we know we're going to have J27 less I27 times 25%, and we're also going to have to pay the tax there. So this is saying once we hit 10 million, we know we're going to have at least 2 million of tax from our lower rates. Let's just see how the VLOOKUP works. I'm just showing you a quick example right here. Let's say we had 12 million of pre-tax, and we're going to figure out our tax rate on that. I'll show you how VLOOKUP works. VLOOKUP, whoops. And Excel's telling us it needs a lookup value. So look up that value in this table, which I'm going to lock, and return to us vertically. I want the third column. I want the tax rate. Tax rate for something at 12. So I'm putting in a reference of 3. And it tells us, look at that, 34%. Whereas if I went down to 6, it's going to say, all right, you're in the 25%. And if I went down to 3, it knows we're in the 15%. So that's VLOOKUP formula. It can be used in a lot of situations. I think tax rates are a good one. Depreciation tables as well to find out what year you're in or what dollar value you're in. So let's put this into action on the income statement. Down in our tax line, whereas previously we just had our pre-tax times an assumption, we can now take our pre-tax, or sorry, we'll now put in a VLOOKUP. So we're going to say VLOOKUP our pre-tax income, and then we need to lock it in on that chart again. And I'm going to lock that chart. And our reference here is the fourth column. I want to know the tax that's going to be paid. And then I'm also going to add in VLOOKUP, same reference. And now I want to find the rate. So I'm going to highlight only these 3 columns. And I want it to return the third one to me. And multiply that by, again, back to the income statement, the pre-tax income less VLOOKUP on pre-tax, comma, our table, which I lock in, and this one I want to return 1. And now I should be able to copy that over if I've got everything locked properly, and it looks like I do. Let's just take a quick peek to make sure. So we've got 11.7 of pre-tax. So that means that I should have 2 million of tax plus on 1.7 I should have 34%. So 2.6, which is what our income statement is now returning. So that's basically how a VLOOKUP is used. What we can do now is put in another control or an Excel control. So this one, let's use a checkbox to see whether or not we want progressive tax. So I'm going to draw ourselves a checkbox. Wait for Excel to catch up. I'm going to right click on it. I want to format it. I want a value. If it is checked, I want that cell to have a value. So let's just show you that in action here. True, you see that switching from true, false, and then I just have a quick if statement down below. But why don't I put in some text in here where I can say progressive tax. I'll drag that over into our tax assumption line. and then we'll be able to have a couple of options for our model user. He or she can use the progressive tax or can use that fixed 35%. So we'll just need to add one more if statement to our tax calculation on the income statement, and we'll be all done with this topic. So what we can do now is go back to our income statement and just alter our tax formula to reflect the fact that we've now got two choices. So we can say, if our progressive tax assumption equals 0, then, and we should just lock that assumption, then we simply want to do pre-tax income times our old 35% assumption, which we'll lock. If that doesn't equal 0, then, and we're going to basically leave our old formula in there, and I think we need one more parenthesis at the end. So we could see we've got a straightforward, and I'll just show you, 10.2 divided by that, so 35%, whereas if we turn our progressive tax on, we should get something below that, 29%. So that covers progressive taxes. Like I said, there's other uses. This is just one of those situations where you can make your model tie a little bit closer to the real world. The last topic I want to cover in this module is a simple print macro. So let's just close our developer tab for now and look at our macro buttons. Macro is basically a programming, but Excel does make it easy for those of us who aren't programmers. We can simply record things that happen on the screen and have those reenacted at the click of a button or by running the macro. So I'm going to go to my record macro button, and what I want to do, and it's pretty standard in models, is set up some buttons so that the user can print. Some people like to see things, have trouble navigating through the spreadsheet, want to either see it on paper or see it in PDF form where everything comes out nice and crisp on one sheet of paper or however many sheets they want. So I'm going to show you a simple print macro. So I'm going to go record, and it's now going to record everything I do. So it's fine. Let's call it print. We're going to print our income statement. So, and I want to record it, and that's fine, actually in this workbook. So it's now recording. I'm going to go to the income statement. I'm going to select the cells that I want to print. I'm going to set my print area. I'm going to go to page setup. So yeah, portrait. I'd like landscape, one page, and print. And now I'm going to stop my macro. So let's now test this out with a print macro button. I'm going to go back to that developer tab. We're going to put in a button, which I want to assign to a certain macro. And let's just give it a name so our user knows what it does. And this one, print income statement. And if we do it, we should see our income statement printed. And you can see it's following through the steps, and it is sending this to the printer. So that's a simple print macro, and you could set up these buttons for, sometimes I'll do income statement, balance sheet, cash flow, model assumptions. You could have it print everything, but it's just a nice feature for users, makes the model a bit more user-friendly. That's about it for the advanced modeling topics. Please join us for future modules.